AI is eating the venture capital space, but we don't think that's necessarily a bad thing. In fact, it is in venture capital where we think there's great opportunities. A lot of those opportunities are tied to AI, but you can see the diminishment in a lot of the other types of what have been very kind of hot places for venture capital, whether it's crypto or software. Those have really receded and given way to this very powerful AI story. In the first 2 quarters of the year, the quarters that we have data for, contribution to overall GDP growth, which has been about 2% if you look at the core growth, it's been about equal between consumers and spending on computers and software, which has really started to come up. There's not a lot of volatility in this graph, but you can see that this contributing 1 percentage point to GDP growth for this relatively small, normally, share of the overall U.S. economy is punching way above the usual weight class. And with the fact that these two things are contributing about the same to overall GDP growth is very unusual. It's usually only during recessions when consumers are actively pulling back on spending that you have equipment and software spending kind of contributing more than overall consumption growth. In this case, they're contributing about the same amount, but as we've already covered, a lot of that consumption may be implicitly backed by optimism around AI that's powering the equity market, which again is powering consumers.